Historically, this is the time of year that gold likes to go on a tear up, but the price at the moment is anything but bullish. So where next for gold? I'm going to take a look in the regular weekly report to see what's going on and see where it may be heading next. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. The weekly line chart for gold not making a lot of progress to the upside, still holding within that yellow box I've been highlighting for the last few weeks between 1700 1850. That seems to be the range bound sort of consolidation area for maybe shorter term swing trading opportunities, but it's got to, like I say, break through that purple wedge pattern before moving on upwards, with more confidence. And downside wise, it's going to be the bottom of that yellow box around 1700, late 1600s, and then a really bad situation with gold will be back down to 1500. So some sentiment based technical analysis. Bottom seasonality, looks like we're coming to the end of the bearish short-term down run, and the price should historically pick up all the way through to March. The commitment of traders day, that's the red for the large commercial line there and the black for the large speculators, doing as I expect, mirroring the price. So inverse for the large commercials and trending with it for the large speculators. So still bearish there at the moment. And if you like the bullish side for gold at the moment, then the line break chart is a great way of getting into those trades, for reversals, calling the turns. And at the moment it's not looking like I say that great. We can see the stochastic indicator at the bottom pointing south, and the area where you'd be interested in for more aggressive entry is around about 1805 in the long term, and more conservative 1870 1880, which sort of marries in with our triangle breakout pattern of earlier. And the daily high Kanashi, well, it's all a bit short term, bearish signals, bearish volatility and volume, sort of weak bearish there, and price trading around its mean of the 2 standard deviation regression bands. That's the salmon pink and light blue areas. And signal wise, we haven't got anything yet, but it is close to a sell signal on the 2 pink line breakout box system. And for the Renko chart, I've used $5 block size, and again all the signals are bearish. We do have a sell signal at the moment outside of the 2 line pink box breakout setup, and that could head the price towards 1762, which is at 23.6 line, or that sort of area. Breaks down further there, it's 1725 and down to the early 1700s. Upside wise, got to get through that noise, like I said, 1805 from the 4 line break chart we looked at earlier, and then 1837, and it's got to get through the recent highs around the 1870 1875 area to push on towards the 1900s. But at the moment it's all looking a bit weak bearish currently. Despite the current sort of weak bearish element to the technical analysis, I'm going to hold my neutral point of view or score for gold, only because the seasonality factors could weigh in to neutralize any more sort of downside there. Though I'm only going to use the technical analysis, time my way into the trades. Now if we head into the signals, it's 1.5, 2.75 to 1 to the upside, 1.4 and 2.4 to one to the downside, and you can go into the top right hand side there and see an aggressive entry point if you're more bullish at around about 1805. But currently I'm going to stick with that neutral point of view. So my final thoughts on gold for this week. Well, it's a bit similar to last week. If you're a range trader, there's still plenty of opportunities there between that like 1700 to 1850 area. Trend trader, well, you're going to have to be more patient and time your way in using the technical analysis. Now maybe seasonality might kick in and give it that boost it needs to go upwards and break through that purple wedge pattern that we saw. Maybe the coronavirus, if that heightens, with lockdowns, etc., that might again provide the impetus that gold needs to get on moving. Let me know in the comments whether you agree, disagree with the analysis, where you think gold may be heading next. I'd like to hear from you in those comments. If you liked today's video, please give us the thumbs up. Don't forget to hit that subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.